FM. That's Journey, and don't stop believing. Don't stop believing you'll be able to retire.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It's time. Check in. Find out just what questions you need to ask your tax or legal advisor. Find out what's going on Wall Street with the help of Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. We got a data dump this morning, don't we?
We do, man. It's like they're trying to catch up or move forward, or there's a bunch of stuff today to talk about.
Absolutely. Let's start out by setting the table real quickly. It was an off day on Wall Street yesterday. We started to the good side and just kind of drifted downward. It wasn't a disaster, but the Dow lost 268 points. Standard & Poor's down 19.5. NASDAQ was down by 71. Big loser was the Dow, down a little over 0.5% yesterday. It was just kind of a slow drift downward after we got the pending home sales number declining after a pretty good number the month before. I was kind of postulating that I kind of saw that as being because the prior month was really doggone good. There's got to be a smooth average across a couple of months. Evidently, Wall Street was unimpressed by it, wasn't it?
Yeah, it was unimpressed. I mean, pending home sales, that was significantly off of expectations. Expectations was for it to grow by about 1.8%. It actually declined by 0.8%. Now let's just kind of compare that, Dave. December's number was down almost 7.5%. So much better than December's number, but just not what was expected.
Absolutely. So real estate is still in a hinky state. And that brings us up to this morning, and my first words to you when I got on the phone before we went on the air was, I got to believe that the markets were really thrilled to death with the GDP numbers. Second reading on last quarter's gross domestic product. First time we looked at it last month, they said, hey, wow, we grew by like 4.5%. It was amazing. It was great. So what do we get for the second reading? 1.4% gross domestic product growth. I was kind of hoping for something to level down a little bit, but holy crud, that's like pulling the rug out from under us, isn't it?
Yeah, that's just a drastic decline off the first reading. And I think a lot of it could be the government was shut down, right? They didn't have all the data when they did the first one. And so now more of that data is coming into play and they're able to make the proper adjustments. We still have one more reading to go before they come out with the gross domestic product for the fourth quarter and then obviously for the year. And so we'll see where that ends up because that was even below the expectation of 2.5%. So I mean, I guess we could go down further, but maybe we'll start to ratchet up once they actually can get some more of the numbers plugged in there.
Absolutely, because off of that preliminary now, they're saying the annual GDP growth off of this second reading would bring our growth in 2025 down to 2.2%, and we'd kind of like it to be a little bit better than that. Kind of thinking going 4.4 down to 1.4. I wonder if there's a betting market somewhere as to how long it's going to be before President Trump fires this statistician. It could happen. Other junk that came out this morning was the personal consumption expenditure inflation rate. Now, that's the Federal Reserve's favorite number to measure inflation. And we did call it in the range of what we were expecting, but the top line number they show us is 0.4% increase last month in personal consumption expenditure prices, which would annualize out at 2.9% inflation on that measure. And both of those numbers were a little bit more than was expected. The core, by my reading, and you and I were sorting our numbers out together on the phone beforehand, the core came in at 0.4% and a 3.0 annual number. That's the non-volatile numbers that actually ratchet up and stay there. But all four of those numbers are all higher than they were last month. So none of this is good news, even if it was expected.
Well, that's right. It's not good news. And so, the Fed's going to take that and say, I don't think we need to lower interest rates anymore because we cannot get inflation under control where it needs to be.
And it needs to be remembered that at the minutes, it sounds like all of the governors with votes on the Open Market Committee are more concerned about inflation right now than they are unemployment. So a hotter than expected inflation rate, or a worse inflation rate than the prior month even if expected, that doesn't bode well for more interest rate cuts from the Fed. And short-term investors are never happy to get that indication out.
No, they're not, Dave. We want because the markets are not going to like that news coming in. And I can tell you, I was watching the futures, and at 8:30 before that announcement, the futures were pretty flat. I mean, we'd bounced up from lower reds to basically flat at that point in time. When that number rolled out, within 3 to 4 minutes, we were, in the red pretty much. I mean, everything was anywhere from a quarter of a point to 0.6 of a point down in the red. And so that continues to be the case now.
A whole bunch of fat cats pushed the sell button as soon as they saw that number. Tidbits out this morning, something I found while I was looking up other stuff that matters. This is really kind of a sign of the times. Off of this past quarter, Amazon, for the first time ever, has beat Walmart in quarterly revenue. That's just a one-quarter thing. Walmart still leads on full-year numbers, but sign of the times, the people that deliver boxes to our doors now are billing more revenue than Walmart is. Brick and mortar is under some duress, even when it's as big as Walmart, isn't it?
It is. I mean, that's hard to believe, but when you start looking at the footprint now that Amazon has in their distribution centers, I mean, I think it was just time before they did it.
Well, the trend was inevitable, but it's one of those passages in time, a little bit like the first time Amazon went into profitability. It was a few years ago. I think you and I both kind of sat up and dropped our false teeth at the notion that Amazon's actually making money. Well, now not only are they making money, they're outbilling Walmart. That's kind of a kick in the pants for people that are used to tradition as it used to be, right?
Yeah, it is, and you're right. We were amazed when they finally started making money, and we wondered why people kept investing in them when they were losing money. But hey, it is what it is, and it definitely seems to be moving in the right direction. I know their stock price has been up and down more than up lately, as they've kind of struggled through some of this stuff. But maybe that'll help their stock a little bit this morning.
And it may very well just, and I think you and I both would agree that probably the reason their stock has been suffering the last few weeks has been over expenditures on artificial intelligence, which is kind of like a bad case of the flu in the tech companies at the moment, isn't it?
It is. It continues to, sometimes it produces some good results in the market. Sometimes it's putting pressure on the market, and it depends on the industry and how it's being used.
Yep. Earnings season continues. I wonder if there's any good news out there today. I get one of our weekend programs in by a Dropbox. They're publicly traded, and I understand they reported. Are more people using them lately?
Well, Dropbox had an okay quarter. I mean, they beat by the skin of their teeth, right? They beat by a penny a share, 68 cents. A revenue just a tad above expectations. Let's just say it was underwhelming from the investor standpoint. And so that has Dropbox trading down about 4% this morning.
Dropbox is one of the pioneers on cloud storage and sending big files by clouds. I remember them when it was still character mode on the internet. They've been around for a long time.
They have. They have. And, so sometimes it becomes commoditized. I mean, it doesn't have as much. They do have some competition when it comes to that. You got Box.com, which is another, just like Dropbox for the most part. And you have more portals being developed too. So it's kind of in late stage at this point.
Absolutely.
Other company we had reporting was Texas Roadhouse. They announced, well, maybe they didn't report. I can't see actual numbers here, but I got to tell you, they had some good news. They came out and said that their comparable sales at their restaurants for the first 7 weeks of this year increased, get this, Dave, by 8.2% from the prior year.
Whoa!
Yeah,
lot of Valentine dinners.
That's pretty impressive. And they think they're going to be able to lift up their menu prices, not good for you and me, by about 1.9% in early April. You have to pay more for that steak.
They're selling more, so let's raise the prices.
Yep. So, but that has Roadhouse up 3% this morning.
I'm glad for their investors. I'm not overly happy because when I take my niece and nephew and they're brewed out every New Year's Day, it's always at Texas Roadhouse, and I shoot a wad for that anyway. You mentioned another company that reported that I had never heard of. Car Parts, Coparts. What the heck is this?
It's Coparts. Copart is a online auction company, but they also own, if you drive between here and Punta Gorda on Highway 17, you'll see there's a Copart. I call them, they're not called junkyards anymore, but I still call them junkyards, used auto parts. For a better term, right there on the right-hand side on Highway 17. So they're a pretty big company. They've got some good fundamentals, typically, and a lot of people may not know the company, but you may have it in your portfolio because it's done really well up until about the last 6 months. And the last 6 months has been getting beat up. Dave, today is no different. They came up short on their earnings by about 3 cents a share, came in at 36 cents a share. They missed on revenue as well. Unfortunately, Copart is getting beat up this morning, down about 10.25% today.
I would think in a hinky economy, used auto parts would probably be a pretty hot business to be in. I'm kind of surprised that they hit a bump in the road. No pun intended as far as what they do. Resetting the table for the morning, it was kind of maybe even just a little bit of a profit-taking day yesterday on Wall Street. Everything was off, but not precipitously. 45 minutes before the open, what did the economic data dump do for us this morning?
Right now, it looks like we could have a negative open. At least the futures are down. The Dow's down about 0.2%. The S&P 500 is down almost 0.3%. And the NASDAQ 100 is down about 0.45%. The big loser right now is the Russell 2000, down 0.75%. On the other side, silver made a huge jump yesterday and today, up 4.1%. It crossed back over 80, Dave, to $80.84 an ounce. Gold up another almost 1.5% this morning to $5,068 an ounce. Crude oil is finally trending down a little bit, but not near enough, down 0.3 to $66.18 a barrel.
I got a hunch we're not going to like that number until we settle things up in Iran. We've got 2 carrier groups out there now, and that's making us a little nervous on the world oil markets. Overseas, the Asian Rim had an off day yesterday. Everybody was. Remember, China's closed all week, so there's not a lot of trading going on the other markets over there, and they drifted downward yesterday. Europe, on the other hand, is not all that unhappy. I'm looking through here. I see no red anywhere. It's not party time, but the average European index is up by almost 0.33% halfway through their trading day. Getting my retirement together takes advice. How do I find you to get advice to make sure my dreams turn into plans, Philip?
Then give us a call at 863-382-0037 to schedule their core retirement analysis. 30 minutes will make sure you're on the right track. They can also go to our website at statlerfinancial.com and schedule there, listen to the repeats of this, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us back here next week again to keep you in loop as to what's going on with your money. I appreciate it, and I wish you a good weekend, sir.
All right, babe. Talk to you later.
Catch you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Imagine for a moment that an intense storm...
Hey, folks, again, I want to thank you for joining us today. Hope you have a great weekend, and I look forward to speaking to you again next week. Until then, have a great day. Bye now.